Welcome to Bears in Exile. Today is Monday, April 23rd, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XOY, XLF, GE, Apple, Starbucks, and VXX. Hey, I actually got them all today. Alright, starting off with the Dow. Big, ugly day for the bulls. I was really surprised, but yeah, that news out of Europe with Sarkozy looking to be on the way out just puts everything in jeopardy and turns everything on its ear, puts into question the entire euro recovery. Incredible what one election can do. But big day down, even with the recovery at the end of the day. More than 200 points to the downside, breaking the previous floor, which was only set on Thursday, and paving the way, by peaking below it, paving the way for a retest of the previous low. Wow. 14-day RSI moving average ticking down, stochastics heading down with their rollover, CCI down, RSI down, histogram down, MACD down. The only thing that's decent for the bulls at this moment, even though we had a lower stochastic reading, this is sloping up. That was one of the reasons why I was thinking that we'd get at least a minor bump up, but no. Beyond that, if we see what volume is doing, ugly. 1 red, 2 red, 3 red, now 4 red, and 5 red. All reds. Now they aren't recent, except for the accumulation distribution. So I have to study that some more. But anyways, 5 reds, not a good thing, and the gaps are closing on a few of them, but there is still room. So, oof, not attractive. Not attractive for the bulls. The Fed starts talking tomorrow, so Benny Boy could run his mouth, and that would change the game again. So we'll have to see what happens tomorrow, but very interesting. Add to that, Apple's results are after the bell tomorrow, and everybody and his brother is waiting for that, including me. SPX went down, tagged the previous low, kissed it, backed off slightly. Much worse shape than the Dow. You can see the long-term moving averages just melting away. Actually, with the Dow, the long-term moving averages are melting away. But back to SPX. 14-day RSI moving average ticking down, stochastics down, CCI down, RSI down, histogram down, MACD down. Very, very ugly. Very possible that this floor is going to break, and we'll be going back in for a test of 1340, the next floor. Very interesting. So ComQ still holding this little line of just this little line not far away from the previous floor. Apple is going to make it or break it. Break of that is going to take us down to the major price consensus level for the previous month and the floor at 2900. Oh, what am I looking at? We've already busted the recent floor. So yes, we've left this area, and wow. 14-day RSI moving average ticking down, stochastics down, CCI down, RSI down, histogram down, MACD down. Not attractive. I think there was almost like panic today. I mean, it was so negative at its peak, which was pretty cool. XOY oil. We were holding this little line in the sand, and now even though it was positive for the day, that gap down just busted us right out of it. 14-day RSI moving average ticking down, stochastics going sideways, CCI down, RSI down, histograms slanting up and ticking up, MACD going sideways, running out of room. So could there be a bump up in oil? Yes. That sentiment though is just amazing. TNA. I was looking at this one intraday, daily running thread for a possible move up. You can see that it has kissed the floor once again, came close to the 200-day moving average, bounced up off of it. We have this big gap to fill, maybe, giving us a hammer, possibly at the bottom of a range. Could there be a bump up? Yes. 14-day RSI moving average ticking down, stochastics down, CCI down, RSI down, histogram down, MACD down. Yes, definitely more bearish than bullish. Do I think that someone will come to the market's rescue? I think it's entirely possible. And looking at the volume on this one, what do we have? 1, 2, 3, 4 reds, 1 green about to turn red, and these reds are fairly old, so would need a new red, but nonetheless very unattractive. And what is there to say beyond that? Very unattractive. Apple. Oh, look at that little hammer trying to form possibly a new floor after testing and now breaking the previous floor. Still above the lower price consensus level. 14-day RSI moving average still ticking down, stochastics ticking down, CCI going sideways, RSI going down, histogram going down, the MACD going down. Still a very ugly little chart. And look at this. We would have had a stop out back here. Signal on Thursday, double reds. Looking back, 4 reds on this day. And yes, it would have grabbed quite a bit. And so 1, 2, 3, 4 reds, about to get a 5th. Apple is ugly. The only saving grace is its earnings tomorrow. Can it turn everything around? We're going to have to wait and see. GE. Try to get a better read on the Dow. And although it was doing better on Friday, it just gapped down, little doji star. Excuse me. 14-day RSI moving average ticking down. Stochastics now looping over, changing direction, both down. CCI down, RSI down, histogram sideways, MACD down. Yeah, why not? Let's see what volume is doing here. We're getting another crossover to the red today. Nope, on Friday actually. So 5 reds on GE. Yeah, that would have caught something on Friday. Wonder why I'm not getting the arrow yet. Well, whatever the case may be. 5 reds. Not attractive. Complete change position-wise than on Friday. So, not attractive. Going on to UUP, the dollar. Ooh, yep. Nice move up, especially at its peak today. Inverse hammer, not much to see from that. Middle Bollinger Band above everything. Good for the bulls. Slight bounce away from the 200-day moving average, but not coming into contact with it. 14-day RSI moving average now taking up. Stochastics trying to turn. Up on the CCI, up on the RSI. Down on the MACD, sideways on the MACD histogram, and still very close to the long-term moving averages. We don't want to see this go back into a double flat line, but as we keep seeing every time it gets away from it, it always tries to go back. So hopefully that won't be the case. But another move up would be good for the bears. So I guess go right ahead, right? FXE, the euro. Yeah, look at that little hammer right in the middle. Not much to tell from that. Middle Bollinger Band getting below everything. So that is good for the bulls. Down on the 14-day RSI moving average, up on the stochastics, down on the CCI, down on the RSI, up on the MACD, up on the MACD histogram. There are a few indications here that this should move up, and that would be good for the market bulls. I guess I should look and see what volume is saying here. We have 2 greens and 3 reds, all of which are pretty old, and it's going sideways, so that's not too much use. We need fresh fires of signals. And going on to GLD, if I can find it. Green day, but with a gap down. Sideways on the 14-day RSI moving average, mixed on the stochastics, down on the CCI, down on the RSI, down on the histogram, down on the MACD, looking for a bearish cross, and not too much. I mean, going in for a test of the new floor would be perfectly fine, but still not too much to talk about since it's still in this little range here. But it did close below the lower price consensus level once again, so overall more bad than good for gold, but we'll see what happens when fear truly increases. SLV. Oh, look at that. Oop. How did I do that? Closing below the lower Bollinger Band with a hammer. 14-day ticking down, stochastics mix, down on the CCI quite dramatically. Down on the RSI, down on the histogram, down on the MACD, but that outside the Bollinger Band should be a warning. And do I think that this one will just fall off a cliff? It certainly shouldn't. So definitely tomorrow I would think would be more bullish than bearish just to get back inside. Going on to Starbucks. Another one. Ending with a pretty hammer. 14-day ticking down, lots of room to move. Stochastics heading down, CCI down, RSI down, histogram down, MACD down. Tomorrow is earnings and possible reversal candle. Everything's going to be on the earnings. Long term, I think that this is a great stock, especially with their single serve coming at the end of the year. But maybe it'll be time for it to be hammered before, long before they roll that sucker out. Tested the 200-day moving average. Tested the bar would be right at 56.60. That would be completely natural, and would be a floor, recent floor, which would also coincide with the upper price consensus level. But it all depends on earnings tomorrow, and the Fed, and Euroland. So all kinds of things to be waiting on. And then VXX. Nice, but kind of a disappointment. I mean, closing right below the major price consensus level. Should have had a bigger day based on all the fear and the down movement of the market. Pretty unconvincing. 14-day RSI moving average ticking up though. Stochastics trying to loop over. They are mixed now. CCI up, RSI up, histogram up, MACD down. I guess leave it to the VIX, right? Did I look at the regular VIX? No, I did not. Gotta fix that. Okay, and the regular VIX, the VIX, the real VIX, huge gap up, and red the whole day. Also not a good thing. Not even going up to retest this previous high. 14-day ticking up, stochastics mix, CCI up, RSI up, histogram up, and MACD up. Different than VXX much better, but still we have to have a break of this previous high, 21, and it really needs to get above 20 and hold, but no sign of that yet. And that'll be about it for tonight. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.